Welcome to another video in the series. Today we're going to be looking at stop losses and how to set OCO orders and where to set these stop losses. First one we're going to look at, this is seller USDT. Now over here we had an initial breakout at this resistance level. So here's the big fake out. Now the idea here is where would you put your stop in order to be safe? So for example here you have a huge wick that came down. So if this wasn't a failed breakout, if you put your stop too close to this resistance or support level at the breakout level here, you might have gotten stopped out of the trade and this could have ran higher. In this scenario, a lot of traders choose to put their stop losses below the previous low, below the support level. It really depends on your risk tolerance. If you can handle a 14% move to the downside, then this is where your stop loss could be. If you wanted to have a tighter stop loss, you might have had it up in this area, a little closer to the support level. If you had had your stop loss here, you could have gotten stopped out at a 14% loss and avoided a 37, maybe even 42% drawdown. So here you would have gotten stopped out at 14% loss instead of 37%. Next one we're going to look at, this is BTC USDT. Now, one of the things I use for confirming a breakout level or a strong resistance, I like to use these things. These are called the fixed range volume profile. You can go into the left hand side here and click on the fixed range volume profile from the toolbar. Once you've clicked on that, you can highlight your range. So this range would be the entire range of this bank of price action. So over here, we call it the point of control at the dotted line. This would have essentially been one of the breakout levels you could have entered into for this trade. Or you could have entered the breakout of this falling wedge right here. So if you were to enter into this trade on the breakout of the falling wedge, you might have had your stop loss a little bit below the wedge. Essentially, it's still below this bank of support over here. If you had entered the break above the point of control, you could have put your stop loss a little closer and had it sitting just below the point of control. You would have been able to capture a 12% move on this move to the upside. Now, if you stayed in the trade for too long, you can see over here that it would have tapped this point of control once, and then eventually it broke through. And this stop loss would have stopped you out of the trade. So you would have taken a 13% loss if you had stayed in the trade with no stop loss. Let's do a quick measure to see how much it would have been if you had entered where the point of control was, and if your stop loss was just below that point of control. It only would have been a 1.53% stop. Next one we're going to look at is CRV. So here again, we had another falling wedge that broke out to the upside. And I've also added the fixed range volume profile here just to add some confluence to the idea. So after you've entered the breakout of this falling wedge, or if you bought the breakout of this point of control for the fixed range volume profile, your stop loss would have gone just inside of the pattern or below that point of control with a little bit of wiggle room, just in case you don't want to get wicked out of the trade if it did happen to continue higher. So in this scenario, we definitely would have gotten stopped out. And with the stop loss, you only would have incurred an 11% loss on this trade. If you didn't have a stop loss, you could have potentially rode it all the way down and taken a 56% loss for this trade. Next trade we're looking at is for ARPA. Now, for this one, we're using OCO orders. OCO stands for order cancels order, or one cancels other, depending on which definition you find online. So an OCO order essentially will stop you out of the trade in profit, or it'll stop you out of the loss with a stop loss. So it's two execution prices in one trade order. Okay, so you'd use the buy side if you were shorting the market, and you use the long side if you're going long, or the sell side, I should say. So this order here for the limit price, that's your take profit price. And then your stop limit will be set just like normal. You have a trigger for your stop, and then your stop limit sell. And the stop limit sell is your ultimate sell price for that trade. So over to the price action. If you were to buy the breakout, here we have a double bottom with a neckline. Now this is very common in crypto, right? So you'll get a move to the upside with the initial breakout, and then you get a bear trap where it comes back inside really quickly and then continues its move to the upside. A lot of people would call this either a bear trap or a stop hunt. So for this trade, I would have put my stop loss below the moving average. This is the 1 hour chart, so that's the 200 MA on the 1 hour. So instead of getting wicked out of the trade, if you put your stop just below the support, I would have found another reason or another support level to watch for, and I would have put my support or my stop loss just below that moving average, just to give it a little wiggle room in case something like this were to happen. So your stop loss would have been at about 0.39992, for the OCO, so you would have put that down here. Maybe your trigger for the stop would have been 0.04, and then your ultimate stop limit sell number would be this number over here. So the top number, the limit price, that's your take profit level. So this is your OCO take profit level, and that's around 0.049807. Again, it doesn't have to be exactly those numbers. You could put it just a little bit below the round number though. See how it's not exactly the 5 at 5 cents? A little bit below 5. The reason why you do this is because a lot of traders will stack their orders at those major resistance levels at round numbers. So if you have yours at the same level, there's a chance your order might not get filled. Next one we're looking at is AXS. So the same idea here, we're using an OCO take profit. And I'd be looking for a take profit potentially around this area of resistance. Maybe if you wanted to get out sooner, you could take it at this level. Over here we can see that you had an initial breakout and then the fake out that followed, right? So there was the fake out to begin with, it came down, then you had a bear trap to the downside, and then it kept going higher to the upside. So again, for this trade, you might want to start thinking about not just buying the breakouts of the major resistance. You could try to get into the trade a little sooner down here at the bottom. So here you have a double bottom forming, and you kind of would have had to front run this idea. But this is a 4-hour chart. That's the 4-hour 200 MA. So at the same level that you have this support or this resistance, right? It's resistance here, and then it broke through. In this same area, you have the 200 MA. So this adds confluence to the idea that it's not just a horizontal resistance that you're buying the breakout of, you're also buying the breakout of the 200 MA at the same time. With this earlier entry idea, it allows you to have a smaller or tighter stop loss for your OCO order. You would, again here, would have put your stop loss below the 200 MA, maybe a little more wiggle room depending on what you're comfortable with, depending how often you're looking at the market and keeping track of your trades. This is really dependent on how much time you have to pay attention to these charts. So the OCO stop loss would have gone below that 200 MA in the breakout level down here at the bottom of the pattern, and then you would have avoided this fake out completely, right? So imagine if you had entered the breakout of this level, you had your stop somewhere in this area, you would have gotten stopped out of the trade and then woke up in the morning essentially to see that it's ran away from you. And that's one of the horrors of traders, is to see that they were in a good trade, they had a good position, and then you got stopped out for a quick move and then it took off on you. It happens all the time. Don't feel bad if it happens to you. So for this trade, the OCO take profit, again, that goes in the top level here, the first line. KuCoin should be the same place for this OCO level for the take profit price, and your stop limit should be in the same place as well. So this is a Binance example picture here, but again, this will work on KuCoin just the same if you follow this order. Last one we're going to look at is Bitcoin on the 2-hour chart. Now this is a currently active chart. So I've pulled a fib from the top down to the bottom here, and this gives me fib extensions to the upside. We have the 1.272 and the 1.618. These are the most common levels that I've found to be resistance levels to the upside using fib extensions. The main target for this move is around the 2.0. The 2.0 is 100% of this range. So if you go from the 1 to the 0, this is 100% from here to here. And if you were to double that, that's where the 2 comes from. That's twice the amount of this range. So for this trade again, I would have added a fixed range volume profile just to give me a better idea of where the true resistance is, right? And the POC stands for point of control. So it really just means that where most of the volume activity was traded at a specific level, that's the point of control for this range. So for this trade, if you had bought the breakout of this trend line, maybe you caught the breakout itself or you bought the retest here, and after this started to climb, you could have put your stop loss right below the 618 once the 618 was broken. If you had entered here and you were still just getting into the trade and hadn't made this move yet, I would have put my stop loss below the 0.272 or the next fib level down below. Essentially here, the 272 and the 618, these are the same levels that I use for my extensions because I find they're the strongest levels for fibs that are respected the most. Again, this is personal preference. You might find something that works better, but for me, these are the levels that I pay attention to the most. So again, here, my OCO stop loss. If you had bought the breakout of this resistance, clearly you had a fake out to the upside, and then you had a bear trap to the downside, and then it continued higher. So this is another reason why you don't want to have your stops too close to the breakout level, so you don't want to get wicked out of the trade or stopped out of the trade too soon before it has a chance to move anywhere. So for this trade, you would have had to accept that you could take a 10% loss by putting it below this resistance level or the support level, expecting a retest. Once it's come down and below the 618, that would have been a 10% loss for that trade. You would enter the breakout of this trend line, then your stop loss would have been below the 0.272. So that would have been about a 9.9% loss. And the point of control here would have also been another factor to enter into this trade. Again, it's just really about your comfort level with how much risk you're willing to take in a trade. If you're using a lot of money in a trade, you might want to have a tighter stop, so you might want to be a little more careful with your entries. If you're using a smaller amount, you're allowed to have a looser stop. And it all goes back to risking only 2% of your portfolio in a single trade. Essentially, that means that you could put almost all of your money into a trade, but you're only allowed a 2% stop loss if you're using 100% of your portfolio. If you're using 50% of your portfolio, then your stop loss doubles. Now you're allowed a 4% loss, right? So this multiples system will keep increasing or decreasing depending on how much you're using of your portfolio in that trade. So that pretty much sums it up for this video. Just wanted to give you guys some ideas of where to safely put your take profit levels, and that's at your fib resistance for this trade, and your stop loss orders would be below fib levels for this trade as well. You can also use moving averages like we've seen in the previous examples, right over here, or you could use the point of control levels for this trade over here. That would have worked just as well. Hope you enjoyed. Take care.